as part of Morgan Stanley. David chairs our Asset Allocation Committee and is the Chief Investment Strategist for the Global Wealth Management Group. So his views are very important to us and to our clients. David has a BA in economics from Yale and an MBA from Harvard. And in addition to that, he's lectured extensively at Wharton, Columbia, INSEAD, and NYU, as well as being a faculty member at Yale and Harvard for the last 9 years. Many of you may have seen David on TV. I can assure you he's much more entertaining personally, and in a forum like this, he'll be able to speak much more frankly than when he's on TV. And despite everything else that he does, he also finds time to write books, and in fact he's written 5 books on the themes of asset allocation and finance. And although it is his 3rd trip to Pakistan, this is actually his first to Karachi. So with that, let me introduce David Darst and hand it over. Thank you.
Good afternoon, everyone, and thank you very much for coming today. And I want to say how much I enjoyed the remarks of Governor Raza, and to you, Mudassir Malik, and to your colleagues, Farouk Khan and Muazzam Malik. We're very grateful to be here as your guest and as your invited speakers. Let me say a couple of things before. We have some slides that we're going to share with you and a handout also. But before we get into some of those slides, I want to give a couple of themes that we're working with on the Asset Allocation Committee. The first is the world is in the midst of 2 recessions, maybe 3, and we hope not 4. So the first recession is a global economic slowdown. Slowdown in global trade, a slowdown in global investment, cross-border flows. This is point number 2 on this slide here. The second recession, which makes this a deeper recession than a normal one, is the financial system is not working properly. It's not working the way we studied in university that a financial system should work. It got too complicated, it got too complex, it got too non-transparent, and it began to not work properly, and it actually began to work dysfunctionally. Now, those are the 2 recessions we know about. Those are the 2 recessions we're trying to deal with globally. The other 2 recessions are an efficacy recession. And this is where, let's say you have a relative, your wife is sick and you go to the doctor every month for 6 months, and after 6 months you begin to question whether the doctor knows what he is doing. Okay? This is an efficacy recession. We're wondering whether the authorities' actions are appropriate, whether they're timely, and whether they can take the opposite reaction when we move out of this economic decline into an economic advancement, and we all of a sudden have so much money all over the world that inflation becomes the problem. Right now, deflation is the problem. Now, we hope this 3rd recession is soon ending. The 4th recession is even more serious, and that's called regime change recession. And that is where people do not know what the rules are anymore. That is where we move in the 1930s, the thing that made a very terrible depression into a 10 to 15-year depression was the fact that people did not know whether the rules were going to be communism, capitalism, totalitarianism, or fascism. And so there have been some moments in these last few months where people have been wondering, is the system going to change? The second theme is we have these global banking write-offs. I think this one here is number 3. It says economy, currency, currency, economy. In the 1930s, the United States destroyed the economy to protect the currency. Today, they are running the risk of destroying the currency to protect the economy. But you cannot have a sick currency and have a healthy economy. You can get a new elbow. You can get a new knee. You can get new organs in your whole body. As long as your blood is healthy, you can get well. But if you have sick blood, nothing that medicine can do to you can make you better. So we're making the great gamble. That's the next bullet point. We're making a great gamble, ladies and gentlemen, that we can withdraw this medicine at the exact right time and in the exact right amount if and when the economy begins to recover. This next point, I'm skipping down, it says here a cleansing, a catharsis. What's happening in the world got out of balance. The United States, too much consumption, too little spending. We say maybe China is 1/3 consumption, and it is 2/3 exports and foreign direct investment. So there got to be these big imbalances all over the world. And this is another thing that we see, there's a positive side to this economic troubled time we have now, and that is a clearing of the slate for the generational baton passing. Because we had the greatest generation. These are the people who fought in World War II, 1930s. They passed the baton of the generation in the 1970s to the baby boomers. And the baby boomers are now passing the baton to the BlackBerry generation. Okay? And these young men and women, your nieces, your nephews, your children, are starting companies now in Pakistan, outside of Pakistan, all over the world. They're much more connected than we were when we were growing up. People in Islamabad are talking to people in Silicon Valley. They're talking to people in London as if they're talking to people in Karachi. So they have a much greater holistic view of the world. And this is another thing that's a positive thing. It's very bad what's been happening the last 18 months. But one is we're wiping clean the excesses, and two, we are moving to the next generation. These are some of the positive things. Now, how would I go about advancing the slides? They just do it by themselves? They do it automatically? Sarah. Thank you, Sarah. Sarah, next slide. Too many words on that slide. Keep going. Okay. This one here is what I want to try to address. What happened, what is happening, what is likely to happen, and what do we do about it? Okay? Next one, please, Sarah. Keep going. Now, this slide is not in your handout, but a lot of things over the last 20 years went down. That's the red arrow. Interest rates went down. Labor costs went down. Taxes went down. International barriers went down. Risk awareness went down. Equity capital ratios went down. Volatility went down, and values and standards went down. At the same time, starting from the bottom, prices